Welcome to the daily edition of the Market Rag for Monday, the 3rd of December, 2007. Well, the whole market woke up a little bit cranky this morning. So you can see we ended up down on all three indexes, but we basically gapped down a little in the morning and chopped around sideways a bit for most of the day. Oil, gold, and the bonds came back to life a little today and started acting a little bit stronger. You can see gold being up 1.5%. Looking over the grid today, you can see there's still just a ton of indecision going on out there. You can see the NASDAQ is starting to underperform a little bit. Coming down to the commodities, you can see how gold and oil have turned red on us being in that lower part of the range. And there's a large discrepancy here between your mid and large caps compared to your small caps, which are underperforming and quite on the low side here. Looking at a chart of the S&P, you can see we made a real small low here right at the end of the day, but basically hung out inside of the range of yesterday. We cleared up all but two of the overbought breadth sell signals we had out there. And the Dow was basically in the same boat as the S&P today. The NASDAQ, which again I mentioned had been underperforming, actually put in a new low and close down there, which the other two indexes didn't pull off. Oil seems to be trying to get its feet under itself here at support after this big move up today. Same with gold as well. Bonds have been moving quite a bit, but when the dust settles, not much has been happening. Coming over here to the sector action on the market grid, again we're dealing with the same strong group we've been dealing with for a while. That's consumer staples, your utilities, and your healthcare. And again, notice technology starting to turn a little red here. Your best performing groups today were the utilities and energy. Here you can see the utilities. It tried to clear this resistance today. Not a great effort since they gave most of it back, but we are still holding above that area. Energy still seems to be struggling around this resistance area here. You had three sectors down more than 1% today. That was the transports, your financials, and the industrials. Looking at the transports, it seems like we might be having a little trouble around this resistance area. Financials gave a little bit back after running into that longer term resistance area. The move down in financials got us filled on our PPS short today. Not great volume, not bad, we'll see what happens. Telecom put in this top-ish signal today, and if that does end up becoming a top, it's going to be a lower high than our previous high, which is going to keep this downtrend intact. Healthcare made a huge charge gapping above our resistance area, only to give it all back and actually end up closing under that line. Not what you want to see. We still have a few breadth overbought sell signals kicking around. All it would take is one decent little move down to get them out of the system. I'm going to go ahead and hold at a -2 until that happens or they get flushed out. Coming over to our allocation, we took 3 new shorts today. This put us a touch into margin, which I'm not a huge fan of. What I'm going to do is run tight stops on a few of these just to make sure we get kicked out at a profit, hopefully, by the end of tomorrow night. Looking at a chart of our allowable risk, you can see those new shorts we took today brought a lot of risk into the portfolio we didn't have last night. The plan on the portfolio is to hold off on any new orders for the time being until we can get off of margin and or get most of this risk squeezed out of the market. We'll run a tight leash on what we have and book what we can. Again, choppiness is still out there. That's the name of the game for the time being.